Mr. Board Chair, I'll turn it over to you.
Good morning, everyone. For those of you who know me, I'm Tony Luisi, DEC Regional Director. Supervisor Crummy, welcome to the Commission's board. We're happy to have you. It looks like we have a quorum, but I will go around and just name off who I see. Supervisor Barber, good morning. Mike McLaughlin on behalf of Albany County, good morning. Elaine Chinian from Parks, John Brust and Stephen Rice and Nancy Pearson, citizen members of the Commission Board. Richard Naylor from Friends of the Pine Bush, good morning. And I will leave Pine Bush staff announcements to you, Chris. I know we have a lot of people on the call. If there's anyone else who I don't see and I didn't name, I guess I'll ask you to speak up. I'm on one screen this morning because I'm working from home, so my IT abilities are somewhat limited. But I think well, Chris, I'll turn it back to you for additional intros.
Sure. So we have Lisa Anthony, our Director of Finance and Operations. She'll be going over our finances and OPEB. Neil Gifford, our Conservation Director, he'll be talking about the Technical Committee. Tyler Briggs, he's our Fire Manager. He's going to be giving a presentation on the Fire Management Program. Wendy Craney has her screen off. She's our technical person for me today. Keeps everything working. She's our Director of Communications Director. Erin Keinel, she's our Education Program Director. She's going to give a brief presentation today as well. Patty McLaughlin. Did you change that to Patty? P-A-D-D-Y for today. Bless your heart. Patty's our office manager and our minutes recorder. So thank you all.
All right, great. Thanks, Chris. So I think our first order of business is just considering the minutes from the December meeting. The minutes were included in draft form in the board packet that was circulated. And I will open the floor for anyone who has questions or comments on those minutes. Hearing none, can we have a motion to accept those minutes?
So
Russ will make the motion. Okay.
Second? All right. All in favor? Aye. So we'll consider them adopted. So next order of business, let me just pull up the agenda.
Oh, that'd be nice. I'm sorry.
Nope, that wasn't a passive aggressive statement to you, Chris.
No, no, but it would be nice if we had it to see. Yep. Sorry.
Now's the time for opportunities for comments from the public. So I believe we have a few observers and attendees to the meeting. Are there any comments from the public?
Sorry, I was trying to get unmuted and I was having a hard time. Richard Naylor from the Friends. Good morning.
Good morning.
Morning.
In December, I reported that we had closed out our 2019 3M grant. And now I'm happy to say that Anil is here so he can perhaps comment, but our 2021 grant is now about ready to be finished. So we will be purchasing the 10 cellular tracking technology tags, which will track the movements of the eastern towhee. So that sounds like a lot of fun. In December, I mentioned also that we were implementing an online donor management system. We had just been using an Excel spreadsheet, which is great if you just want to make mailing labels and keep up with the present, but this will allow us to automate some of the things that we've been doing, which means that we can communicate a lot more efficiently and keep some history. So far, it's fully implemented, although there are so many other things that we can do with it, and that'll take probably years before we know, and the software always changes, so who knows. We also changed from PayPal to Square, so we saved about the same amount of money right there that we're going to be paying for the donor management system, so that's kind of good. Also wanted to mention the 20-mile challenge, that we've got 81 people now who've hiked all 20 miles of the preserve. We had a few during the winter. That doesn't go quite as fast as in the summer, but I was kind of pleased. Every week I would come in and there would be somebody in the box once it was full of snow and ice, as well as one thing on top. But feel free to talk about that, because we want to make that kind of a big thing and continue with that. It's been picked up by other places. We stole it from Adirondack Mountain Club, but since then other people have taken it from us as well. So that's kind of neat. And one more thing, if you come across somebody who would be a good board member for the Friends, we are definitely trying to add a couple people, because we try to do more and more, and we need more committee people since we're volunteers. You know how your to-do list goes. I never finished mine. And so we just needed to add some more volunteer hours. So thank you for your time, and turn it back to the chair.
All right. Thank you, Richard. Out of curiosity, is there a deadline for completing the 20-mile challenge?
No deadline at all. You can get, every trailhead has flyers. It has forms to fill out so you can track your progress. And all you have to do is you can take a picture of it and email it to the Friends, or we have a box right outside the door. When you come into the commission, you'll see a box for the 20-mile challenge. So that's kind of cool right there.
Maybe we should come up with a board challenge for that. We'll take
Wow,
that.
that would be cool.
All right. Thank you, Richard. Any other comments from the public? All right. I think we can move right along. I believe next up are other reports, starting with me. So I don't have anything formal. However, we are in the midst of budget season. The executive budget was released several weeks ago, proposing significant increases to the Environmental Protection Fund, which of course is used for land acquisition and farmland protection and invasive species eradication, and enhancements to recreational access and water quality improvement, as well as environmental justice priorities. In addition, the executive budget includes significant funding for the Clean Water, Clean Air, and Green Jobs Environmental Bond Act, as well as additional significant investments in the state's offshore wind supply chains and port infrastructure. The legislature also released their one-house budgets, and there remain negotiations that will be needed over the next couple weeks. So we'll all stay tuned for the final budget in a few weeks. So that's it from my perspective in terms of any updates or reports. And I'm sure there will be a lot more to share at the June meeting with respect to what I just mentioned. So that's it for me. And I think we can move right along. Do any other board members have any reports to share? All right, then hearing nothing, I think I'll turn it back to you, Chris.
Okay, Tony, I can jump on that with the budget. I sent some information to you and members of the audit committee and the staff. So the one-house budgets that came out over the weekend, the Assembly increased our appropriation to $3 million from $2.675 million. The Senate did not increase it, but did include $13 million for priority projects. So what happens in negotiations between the two houses and the executive will be interesting to see. That increase was promoted by the Assembly, chiefly from Assemblymember Fahey, who posted on Twitter and Facebook yesterday about that. So that's very appreciated. Kind of along these lines, here we are in a Zoom meeting, the 8th, I think, Zoom meeting, and hopefully the next one in June will be in person. The governor yesterday, you may have heard, extended that part of the open meetings law that does continue to allow for virtual meetings. I just read this morning, I think there's over 15 groups that are advocating for a continuation of either virtual or at least hybrid meetings, because there are a number of individuals that can't make in-person meetings. So a hybrid function or hybrid type of a meeting might allow for even better public participation. So my hope is that goes through, because I would like to be able to do that. I'd like to be able to host a meeting. I'd like us to be able to host our meeting in person again at the Discovery Center, but also provide a hybrid option. So stay tuned. I don't know if we can see that since it's in reverse. This is a postcard. 6,000 of these postcards were mailed out this week. This is for our fire management program. This is put together by Tyler Briggs, our fire manager, working with Wendy Craney. And this year, they worked cooperatively together to set up a site on our website where you can go. If people have questions or want to sign up for daily notifications, they can go right to our website and do that. And instead of getting phone calls, because some days we'll make 40, 60, 70 phone calls to businesses, to individuals. And there's an option here, instead of getting a phone call, to get an email. So you'd be on an email list the day before a burn. So you'd even get prior notification. So, and that would be set up as an automated function. So we're moving into even more efficiency here. Fire program you're going to hear from Tyler about. So I'll leave it at that. Here's another show and tell. Discover Albany guide. Sorry, they're in reverse. This is from the Albany County Convention and Visitors Bureau. Discover Albany that's the tourism arm of Albany County. These tabs, thank you, Wendy, note every place in this guide that the Pine Bush Preserve is mentioned. There's 5 sections, so that's exciting. Discover Albany, they're a really big partner of ours, and we enjoy working with them. The Nature Bus. Elaine, you know about the Nature Bus. Tony, you know about the Nature Bus. So this is an initiative between the Mohawk Hudson Land Conservancy, DEC, Parks, Albany County, and CDTA to basically get folks from the inner city who may not get to open space areas, parks and the like, to get them there for free on a bus. So this started last year. We weren't able to participate for logistical reasons, really, with CDTA and how their buses function. This year, we're included. And Aaron Keinel on our staff has worked with Mohawk Hudson Land Conservancy, the staff that are running this, to help this get coordinated. So it's going to stop at Rensselaer Lake at 6 Mile Waterworks this year. So it starts in May 28th, and it runs every Saturday, and it goes through September 24th. Last year, they had over 1,000 people ride. I think they were hoping for a lot more, but I think 1,000 people for the first year without a whole lot of publication is really good. So this is a way to have people that don't have an opportunity to get to the preserve, our preserve, or other preserves otherwise. So I think I'll leave it at that. Just one quick thing. I mentioned at the December meeting, we were going to pursue acquisition of that 15-acre parcel. I will share that screen because that's worth seeing here. This 15-acre parcel here outlined in red, we got it appraised, and we're working with the property owners now. The board approved my ability to make an offer based on fair market value. So we are doing that. But the interesting part here is, if you can see my cursor, this green polygon, and this green polygon are the 41 acres that the town of Colony just dedicated. Thank you, Peter Crummy. Within a month being in office, the town of Colony, the new supervisor, dedicated 41 acres to the preserve. And now we're working on adding another 15 to it. And that resolution is our first resolution. And I think we talked about this at our audit committee, right? So if you look at this cluster now, all together, this contiguous cluster, and that's the whole idea, to build contiguity, right? This cluster alone now is about 120 acres. So I wanted to share that.
That's great. Are those adjoining parcels available, Chris, in the future, do you think?
They aren't now, but they may be. They're still vacant. Yes.
Yeah. Okay.
So we're going to work on it, John. And I usually go through the update that's in your board packet. I won't do that. Please take a look at it. The stuff that's been going on within each department, and as well as the media articles. We had nice media coverage over the last quarter that Patty sent you to. And that's it.
Great. Thanks, Chris.
Chris, one of the articles talked about the solar farm. Will that be talked about by Neil?
Yep, Neil can talk about it in the technical committee report, and I can follow up if you need to. Yep.
All right.
Which is a good segue because Neil is next up.
That's right.
Great. Good morning, everyone. Can you hear me?
Yes.
Excellent. I'm going to share my screen so you can see the vision map as I review these projects. For the first time, the Technical Committee's quarterly report is embedded within the packet that you received. It starts on page 13, I believe. You want to follow along. I need screen share.
Can you share, Neil? There you go.
Yep. All right. Well, good morning, everyone, and happy St. Patrick's Day. The Technical Committee has met once this last quarter, but it's been activities picking up a little bit. But before I get into the nitty gritty, I'm going to eat a little humble pie, and I can do math. So if you look at the table at the beginning of our quarterly report, it says in the town of Guildwood there were 6 projects. It's actually 4. Some of those projects hit multiple protection categories, but the total there in Guildwood is 4. I want to start off with the city of Albany at the landfill. Just to remind you that the habitat restoration project continues, and the city is looking at we're looking to get their annual monitoring report, which was due back in December, and they are looking to begin restoring the closed landfill, what we refer to as the Albany Interim Landfill, the AIL, this eastern end, beginning this spring. So hopefully that activity will get going this spring. Nothing new to report with the Crossgates project, that large project in section area 57. Right here, so you can see that on the map.
Can you make it smaller, Neil?
Make it smaller?
Yeah, it's blown up really big on the screen.
Oh, what's that look like? I'm looking at the whole map now.
Oh, that's better.
Okay. So Crossgates is down here at the south, and the apartment complex and Costco associated with that with their initial proposal still remains in litigation, although I think that is currently being considered by the courts. Additionally, in Guilderland, in protection area 3 on New Corner Road, there's a small minor subdivision with minimal potential for impacting the preserve. Technical Committee reviewed and commented on that, as well as a request up here in the west at the Caprio Park, where within the existing park and within the existing soccer fields, they're looking to make one field a turf field. So they're creating an artificial turf boxed field within the park, and the supervisor asked the Technical Committee to review that project, and it too is unlikely to have any impacts on the work of the commission. Moving into Colony. The only new project to answer John's question is the large project in Colony, in what we formerly referred to as Bibbs's Field. Chris, I'm going to try and blow this up just to zoom in a little bit, if that's all right.
Absolutely.
Okay. So hopefully you're seeing the same screen share that I'm seeing. It's up here in area 72B. It's a number of large parcels where Eden Renewables is looking at establishing 2 community solar facilities adjacent to each other. And as you can see, our protection map is a little bit out of date now. In addition to the parcels that Chris mentioned that were added up here in 52A, there are 2 parcels here in area 72 that have been added to the preserve. So this field has protected preserve land to the south, to the east, and to the north, immediately adjacent to the project. So Eden came and met with the Technical Committee and staff early on in their application process, and most recently they went before the Town of Colony's Planning Board for their sketch plan review. And preliminarily, what they're looking to do is about as compatible with the existing preserve as it could be, absent our ability to be able to purchase the property and add it to the preserve. Unlike most solar facilities where it's typically, surrounded by turf grass and mowed throughout the year, they're basically looking to establish native grassland habitat, complete with wild blue lupin for corner blue butterflies and frosted elfins, within pretty much the entirety of the solar facility inside the fence. And they're looking to restore additional acreage outside the fence within the property that they're looking to own. They currently have an option to purchase the property, and if all of that goes through, I think they will be successful in minimizing and mitigating any potentially negative impacts on the preserve. Again, ideally, we'd love to see that property added to the preserve. It's been one of the highest priorities going back, I think, almost as long as the preserve's been here, at least for the 25 years I've been here. But absent being able to protect it, I think what they're proposing is potentially a reasonable balance. That, you know, as I like to say, the devil's always in the detail. So we'll see what they put on paper. But thus far, I think they've been working with the town, with the commission in good faith to try and address any potential issues as they related to the preserve.
Chris, can you expand upon that? I mean, to me, it doesn't seem that the return on investment for a solar field would equal selling the property. But there's always more to these issues.
Yeah, I don't know. I mean, I assume they've done the analysis to make sure that it works, right? Like Neil said, so we have, going back to working with the Nature Conservancy, even before I was the executive director, I worked with TNC on this property to appraise it. And I know it's been appraised at least twice. And we just couldn't come to an agreement with the property owner. Unlike the Nature Conservancy or agencies like the commission or the state, private entities can pay, they don't have to pay fair market value. They can pay whatever they think is worth, the property's worth based on a return, right? So I don't know if that really answers your question, John.
Chris,
Yeah, just hate to see it. It's been a big priority for so long, as Neil said, and I just hate to see it go this way.
Yeah.
We have so much vacant land in upstate New York. We're increasing the amount of vacant land with people leaving the state, for God's sakes. And it just seems like there could be a better answer. That's all.
Yeah, the property owner, well, at least I remember the last appraisal wanted at least double, if not more than double of what the appraised value was, based on what the individual expected they could get on return if they were to get approval for a housing subdivision. So that's just not reasonable. This isn't, I guess from the standpoint of, if you're going to lose property, high value property, recommended for full protection added to the preserve, instead of having a full development where you have an industrial building or buildings, subdivisions with houses and suburban lawns, if you can take something where you can still have habitat underneath the solar panels, you still have contiguity to some degree, right? You're going to have wildlife movement to some degree. You'll have insects moving. So that's
to John's point. I understand where he's coming from, but from the technical committee and staff's perspective, we can only respond to what's presented before us.
Yep. I understand.
And in this case, the balance is between dealing with climate change, renewable energy, biodiversity conservation. It's not ideal, but it could be, as Chris alluded to, it could be so much worse. And I think it's, to your point, John, it's early on, so that the town is still hearing and receiving comments on the project. So the final design could be different than what they're proposing initially. But we'll continue to follow it and update you all quarterly on it. The last thing I wanted to mention, and the reason I zoomed out to the whole map again, is that one of the resolutions you have in your packet today is to authorize the technical committee and staff to begin the process of reviewing our management plan and final environmental impact statement. We last did this in 2017. The Environmental Conservation Law, Article 46, requires that we that we at least review the plan once every 5 years and update it as needed. So that's something we're asking you to consider today as part of your meeting, so that the technical committee and staff can begin that process. And thank you. Happy St. Patrick's Day.
Thanks, Neil. Folks have any other questions for Neil?
Yeah, just one quick question about going back to the proposed solar project. Has the
Yeah.
commission ever tried to negotiate options to purchase? You know, because I'm thinking that this project sounds like it's pursuant to a lease, not a sale to the developer. And if my assumption is correct, then the lease comes to an end someday. So I'm curious if the commission has ever entertained the idea of acquiring an option to purchase at some future date.
We could. We haven't entertained options. We used to work with options. We have done options on property in the past, working with TNC. This property is actually a sale. It was set up as a lease, but now the owner, that was one of the, I think the developer has found, has experienced the challenges with the property owner that we had in the past. And basically to move forward with their project, they indicated that they were going to have to end up purchasing the property.
Okay.
Is that right, Neil? That sounds right with our conversations with the developer.
Yeah, that's correct. So Eden currently has an option to purchase the property rather than lease it.
Yeah.
Okay, thank you.
But again, like this is a high priority area, so we're going to continue to follow it closely, work with the town on it. Okay.
All right. Thank you.
Thanks, Neil.
We'll turn it over to Lisa for the financial report.
Good morning, everybody. Happy St. Patrick's Day. Before I begin, I'd like to wish Chris a happy 29th anniversary yesterday at the Pine Bush.
Oh,
Thank you.
Wow.
And congratulations. I know you're only 39, so I don't know how that can happen, but hey.
Aren't you kind? Thank you.
You're welcome. Okay, so the first report up, statement of financial activities. This is 10 months of our fiscal year. It's through January 31st. So I'll begin with the revenues. Dues and contributions are slightly higher in budget. This is because our quarterly Trustco donations came in a little bit higher than we budgeted for 21-22. Government grants and contracts are very close to budget. They're 98% of budget. This is related a little bit less, directly related to expenses below because it's a grant, it's a cash and expense reimbursement based grant. Mitigation fees are under budget $13,000. This is due to tonnage from the landfill, and this will come in under budget for the year. We're averaging about $32,000 a quarter, and we budgeted $37.5. Lease revenue is on budget for the year, and other revenue is slightly higher than budget, and this is just due to increased sales, merchandise sales in our gift shop. So overall, total revenue came in at 98% of budget through the month of January. Moving on to the expense side, personnel and fringe are at 89% of budget. This is mainly due to a less expense in our New York State and local retirement system, which I will touch on in our balance sheet as well. But for the year, we're going to come in very close. We should be within about $10,000 of our total number, which includes our OPEB, which is our non-cash expenses. Our total budget is 2.9. We should come in about, a little bit under, I would say 6,000 to 10,000 or so. We're still looking at that. Travel and training is $24,000 under budget. A lot of this is due to COVID. We had a big fire conference in the fall that canceled due to COVID. So this will be a little bit under budget for the year. And contractual is very close to budget for the year. We had a little more invasive work here. Communications is under budget. And this, we have a lot of expenses in March. We have $8,000 for banners. But but we do have some things that will be under. We didn't really have public events due to COVID and or kiosk dates. Occupancy is at $73,000 under budget. $50,000 of this you will see under fixed assets, capital expenditures below. We replaced the security system in our Discovery Center, and this is a placeholder for our repairs and maintenance. We also had a bathroom remodel of $15,000 that we completed last fiscal year that was budgeted for this fiscal year. So that makes up that difference. Supplies and equipment is 61% of budget. Again, this is timing. Right now we have vehicles in, we have equipment in for repair, a lot of them. So this will probably come very close to budget. We have a lot of PPE equipment on order. So we'll have a lot of expenses in March. Other expenses are under $11,000. Some of this is due to marketing and promotion. We didn't hire our volunteer coordinator position, so this will come in a little bit under. So there were no outside events on this either. So total expenses came in at 87% of budget. Overall, both revenue expenses came in under budget, giving us an operating surplus of $322,000. And then I'll go through our balance sheet and our non-cash expenses below. We try to list this like this, just so you can see how we're operating versus the expenses that we book, like depreciation, that aren't cash-based. So below that, capital expenditures, which will not show up on our income statement, they will show up on our balance sheet. This is the $50,000 for the security system that I mentioned above, a little bit higher than we budgeted. And then down to non-cash operating expenses and revenues, you'll see our OPEB service cost. This is our annual service cost that we book for post-employment benefits, came in at a little over $1 million. So if we take that, add our depreciation expense, we had a net gain on investments of $241,000, which I'll get to in a minute too. If we go down to total changes in net position, gain or loss, this is what will show up on our final audit. So I put these figures here just so you can see how they all lay out in different financial statements throughout at the end and at the end of the year, which would be a loss of $734,000. Excess deficiency revenues over expenditures. I include this line as well. This is the line, this is our budget and our 5-year budget that you're going to see in Paris. So this equates to what we would put in Paris at the end of the year. So any questions on that? So you can kind of see how we operate positive, and then you take the non-cash expenses and it'll show a loss at the end. Any questions on that? Okay. Next, we go on to the statement of net assets. Cash is very close to what we ended with last year. This is just due to the timing of expenses. Grants receivable is $200,000 under what we had last year. Actually, this is zero. This is the receivable from DEC as well as our federal grant. Both of these have been paid. Accounts receivable is under a little bit, decreased slightly. This also is zero. This is our quarterly mitigation. This has also been paid. Inventory decreased slightly. We did a physical inventory and had to make a couple of adjustments for marketing and promotion items and damaged goods. Prepaid expenses decreased, and this is just due to the timing of year-end expenses that occur in our next fiscal year. In March and on our audit, you'll see this will be higher and probably pretty close to last year's number. A little bit lower. This is just due to expenses that we have to pay in March that are actually for next fiscal year, beginning in April. Investments increased $641,000. This is due to a gain in investments of $241,000 plus a cash transfer of $400,000. So good news for the through the month of January at least. Capital assets decreased $153,000 due to depreciation expense of $230,000 plus our purchases this year. Land remained the same, and deferred outflows from New York state and local retirement. This is our annual GASB 6871 evaluation that we get directly from the New York State retirement system. It's over 150 pages of an actuarial report. We get it every year. This is the asset portion. We made a $10,000 cash increase payment, and we had a $158,000 increase in deferred inflows. And this is our changes of assumption. This is our actual and versus our expected experience in investments and contributions. It's all right there on that report that we included. All these numbers come directly from there. I will draw your attention below to the New York State pension liability, because the assets and the liabilities offset each other. It comes from the same report. So we had a $169,000 increase in our assets, and we had a $56,000 increase in our liabilities, netting out on our balance sheet of $112,000 more in assets and liabilities. So not a really big change for these big numbers on here. So total assets came in at $410,000 higher. And this is due to a gain in investments, really, and deferred outflows in the New York State retirement system. On to liabilities, accounts payable increased slightly. This is just due to our accrued expenses through January. Deferred revenue, this is $15,000 higher, and this is an advanced rent payment from TNC for February that we received in March. And I have flipped that over in February. New York pension liability, this is what I touched on above. Our discount rate decreased. This will increase our liability. And this has a really big effect. You're going to see this in the audit in two places. You will see it under GASB 68 and 71, which is the New York State and local retirement system. And you will see it under OPEB, which is our post-employment benefits. A 1% increase or decrease in this rate can increase or decrease our liability by over $1 million. And we put this, Wojcicki puts this in our audit just to show this. It's also on our reports. You'll see that 1% increase and decrease in the New York State retirement at the bottom of that report included with your packet. So it makes a pretty big difference. OPEB liability increased over $1 million, and we have the breakdown. Again, the discount rate decreased from 2.48 to 2.27, and this increases our liability quite a bit. And our average age increased from 48 to 49 years old. So people are closer to retirement. People are closer to collecting those benefits. Total liabilities increased 1.1 million. And this is really due to the OPEB cost that we have to book every year, which is, again, it's not cash. It's something that we have to book every year. It's our annual allocation that we get from our actuarial report. So net assets, investments and capital assets, as above, decreased $153,000 due to depreciation expense of $230,000 plus our purchases this year. Reserved assets decreased $9,000, and this was county mitigation that has been paid. Unreserved assets decreased $572,000, giving us a decrease in total net assets of $734,000, which actually relate to the income statement that we just went through on the bottom. And that is made up of a surplus of $323,000, a gain on investments of $241,000, depreciation expense of $230,000, and an OPEB expense of $1.068 million. So, any questions on that? Okay. Moving on to investments. January was actually a very good month. We had a total gain on investments of $241,000. We had a loss in the reserve fund of $11,000, and then a gain in all three other funds. The Discovery Center gained $7,000, the Endowment $241,000, and the OPEB reserve account $4,000. So our total net investments was a gain of $241,000. February statements came in. We had a net gain still of $152,000. So that was a good month. I'm waiting to pull March. So I don't think that's going to be quite as positive, but we've had a good year so far. Any questions on that? Okay. Thank you, everybody. Happy St. Patty's Day.
Lisa, do you want to just quickly go through this? So in the board packet, I did not include the New York State retirement summaries or the full OPEB report. So I can provide that after the meeting if people want them. Maybe I'll just do that anyway, now that you've gone through it, so I can include it. So Lisa puts these two summaries together for OPEB, the other post-employment benefit information based on Milliman's evaluation from the actuarials that go through all the details. It has the assumptions in here. Of course, I said, Lisa, can you do this? And now I'm doing it.
So
But
I can just give a summary too to make it, to try to simplify
do that.
it. So what I do is I put everybody in. I do a whole census. So we have all of our staff, including spouses, ages. You know, we do birth dates, we do years of service. They calculate years left to retirement. I put in actual healthcare expenses for the year for both family and single. We have two plans here. And then we go through a series of assumptions. We use a discount rate from Fidelity, and that actually decreased. We use that rate every year. It's the rate all actuaries use. We put in all of the information. It's based on 12 payments per year. Our employee coverage is based on a two-tier plan of 90%, 75% of individual versus family. Salary increase of 3% assumption, participation rate assumes 100%. And then there's a mortality rate in there. Average age of retirement is 62, but a minimum age of retirement of 55. So I put all those actual numbers in, all our years of service, ages of everybody on the plan, and we get this really nice, like it's 24 pages. It'll glaze you over. If I haven't glazed you over already, that will glaze you over. But this is the basis. This is the summary of the report. So I like to do this because it's a very complicated report if you look at it, but this is how it's derived.
Thanks. So basically this one page is everything this is the assumptions that we input. And this is basically the summary from the full report that we get using those inputs. So you have that, and that's what Lisa puts together. After the meeting, I'll send you the full report so you have it. If you immediately delete it, that's fine, but you can have it if you want to go through it. To be serious, if you want to pay attention to it, probably the first 5 or 6 pages have the most detail, and the rest of it is, you can see what it is. So
through page 9 and 10, it kind of summarizes what I have here. So
great. Thanks, Lisa.
And Chris or Lisa, I'd like to add for the full board's knowledge, we did have a long conversation in our audit meeting about how the funds that we put in reserve for this are invested, and trying to strike that balance.
Right here. Yep.
Yep, and we're trying to strike a balance between a secure investment and an adequate return on that investment. So those conversations are going to continue at the next audit meeting with Don Sapas's leadership.
Thanks, John. Yep, we're going to talk about the OPEB fund at the audit committee in June, and look at the investment policy statement, which we're actually talking about today too. Okay. So resolutions.
All right, so we have 4 resolutions on the agenda for today, and I think we may be able to move through them at a decent clip. But the first one, as Neil mentioned earlier, our management plan is required by law to go through a 5-year update review. So today's proposed resolution is simply to authorize and direct Chris as executive director to work with the technical committee on reviewing that plan and preparing a summary report, which would then be presented to the full board at the June meeting. And then, of course, we'll have an opportunity to discuss and vote on any recommended updates at that time. So Chris, correct me if I'm wrong, but I think this resolution is limited only to authorizing that review, correct?
Yeah, all it does is it starts the process, authorizes the staff and technical committee to start looking at the document and say, okay, what do we need to update? What is still accurate? And then come back in the next meeting and say, yep, it probably needs to be updated. and then start the process. The last time we did this, the 2010 management plan, the board followed the same type of process. Technical committee working with staff, basically led by Neil, and again, be the same thing. Took over 2 years to go through it at a decent pace, gathering information to adopt and update this 2017 plan, and not recommending any hiring of consultants to help with it. Doing it all internal.
Okay. Is there any discussion on this action item? Can we have a motion to approve?
I'll make a motion. I'll second.
All in favor?
Aye.
All right, any opposed? Motion carries. Thank you. Next action item is the formal proposed acceptance of the Town of Colony's dedication of 41 acres as previously discussed, but is there any further discussion on this item? I will move to approve this resolution.
I'll second.
Great. All in favor?
Aye.
Aye.
Any opposed? Motion carries. And thank you, Supervisor Crummy.
Absolutely. Thank you.
The third action item is we are required by law to review our purchasing and procurement guidelines. Chris, is that on an annual basis or less than that?
Annual.
Annual. Okay. Are there any proposed changes to the guidelines based on last year's?
No. And I actually checked with outside counsel because there have been some changes to procurement. I had them look at this document. They said, no, it doesn't influence this. And we had a discussion at the audit committee and there's no recommended changes.
Okay. Is there any further discussion regarding the keeping the purchasing and procurement guidelines as is for the next fiscal year? All right, may we have a motion to approve?
So moved. Steve.
I will second.
Tony.
All
Thank
in
you.
favor?
Aye. Aye.
Any opposed? All right, thank you. And last but not least, for action items, similarly, I believe this is also an annual review requirement, but the motion is to is proposed to approve the commission's investment policy. Same question, Chris. Are any updates or changes being proposed as compared
Nope.
to last year?
Not at this time. And as John brought up, the audit committee will take a look at this as part of its review for the OPEB account too, and report back in June. But at this point, no changes.
Okay. John or anyone else, is there any further discussion needed on this for current meeting purposes?
Not by me.
Unless there's anyone else who has any questions, can we have a motion to approve?
Russ will make that.
Got it.
Second.
All right, all in favor?
Aye.
Any opposed? And I believe that concludes our action items for the meeting and brings us to maybe the highlights, but the presentations. So I'll turn it back to you, Chris, for introductions.
That sounds good. Thanks, Tony. Yes, so this is our annual report, our first presentation on our investments from Key Private Bank. Brian Hughes is here. He's going to present to us. He went through this pretty thoroughly with the audit committee last week. So we welcome him. And also Susan Zongron and Sasha Herzig are here with us too. They work with us as well. So Brian, I'm going to stop sharing and make sure that you can.
Okay, great. Pull this up. Can everybody see this?
Yes.
Okay, perfect. And also, Chris, before I begin, time frame wise, what should I be shooting for in a perfect world?
What time is it? 10:30? Well, we're right on time. 15 minutes.
Okay, perfect. All right. Thanks.
Yep.
So what I'm going to do today is give an overview of each of the 4 accounts that KeyBank manages on behalf of Albany Pine Bush. And during the presentation, I'll touch on some of the main points, that be our what we call our key takeaways, but will be the highlights of the economic summary that I'll kind of surmise at the end as well. So the first account we'll go through and is the Discovery Centers account, and this is as of January 31st. Again, this is the way it was presented to the Finance Committee about, well, actually exactly a week ago. So this account is running about 3% cash, roughly about 57% equities, fixed income about 30 to 33%, and real assets, which we'll touch on in a bit, are about 7% of the portfolio. And you can see, so this in the top right-hand corner, you can see this is a balanced objective. And what that means is on average, we shoot for about, we target 50% equities and about 50% fixed income if you consider cash part of the fixed income allocation. So again, you're starting to see some of our current thinking that we've kind of been maintaining for a while across all our client portfolios, where we're overweighting equities versus fixed income, and also moving some of the money from fixed income into real assets as well. Real assets being an inflationary hedge in the portfolio. And again, that's, part of the thinking is, despite kind of coming through there's 3 Ps that we kind of see in the market right now. There had been 2. Unfortunately, now there's 3 with the pandemic. Powell, in reference to Powell, who's head of the Federal Reserve Board, kind of, in charge of maintaining interest rate levels on the shorter end of the spectrum. And with all the inflationary pressures in the market, coupled with the situation in Ukraine, which is the 3rd P, which is Putin, it's kind of a unfortunately interesting time in our economy. With that being said, with kind of the strong corporate balance sheets, strong corporate earnings to date, and the overall low level of interest rates, historically, we're maintaining our overweight to equities. And then within the portfolio, you can see we're overweight really large cap stocks versus international developed and emerging market. And this is a look at the metrics of the fixed income portion of the portfolio. And again, we're trying to, keep the weighted average duration towards the lower end of the intermediate spectrum. In this portfolio, given that we're in seemingly a rising interest rate environment, as basically the market's pricing in between 4 to 6 Federal Reserve rate hikes this year, given the inflationary pressures that we're experiencing in the market, which is interesting in that regard, because we haven't experienced inflation like this in quite some time, really not since the late 70s, early 80s, but also given the conflict in Ukraine, typically this would be a time when the Federal Reserve Board would maintain interest rates, if not lower them, given that we're at such historically low levels. They can't really lower them, and they can't really maintain them, or at least that's what most think, just given the overall inflationary pressures that we're experiencing in our economy, domestically and also globally. This I refer to as the balance of accounts, and again, it traces very clearly the path of the portfolio, beginning in 2018 at roughly $110,000 net transfers in and out. Fees and expenses depicted clearly, income, capital gains, and dividend distributions to the portfolio. other change in market value is unrealized gain and loss in the portfolio. So this is, market fluctuation, and ending market value of $145,000, a little bit more than that. That is of the end of January. Then in terms of performance, you can see we're outperforming in, over a 1 year, 10 year, 5 year, and a 1 year, 3 year, 5 year, and 10 year trailing space. We've had a tough start to the year, really kind of with our blend of equities underperforming a bit, as well as some of the fluctuations in the fixed income market causing some shorter term disruptions. This has actually snapped back quite a bit over the month of February, and is maintaining that so far in March. No questions there. I'll move on to the next portfolio. And this is the larger endowment fund. Again, balanced objective, fairly similar profile. Cash and cash equivalents of roughly 2%, equity portfolio, call it 55%, fixed income running about 36%, and real assets about 6.5% of the portfolio. And again, similar story here, maintaining the overweight to equities versus fixed income, and also kind of drawing some of the fixed income portfolio into the inflationary hedge of the real asset basket as well. Actually, in this, I'll touch on very quickly. So one of the main differences is really just due to even though they're both balanced objectives, just due to the overall size of the portfolio versus the Discovery Center portfolio. In this portfolio, for the large cap equities, we're able to make use of the key private bank core equity strategy, which runs between kind of like 40 and kind of 55 to 60 individual equities, which is based off of the S&P 500. It's just due to the smaller size of the previous portfolio. We literally can't get the right mix of equities just due to share price and whatnot in that portfolio. We make use of a blend of mutual funds and exchange traded funds. And here kind of gives you a breakdown of how the core equity is positioned versus the S&P 500 by sector weight, and also your top 10 holdings by name, market value, and also percentage of the common stock portfolio. This isn't percentage of the overall market value of the portfolio. It's really just a percentage of the large cap portion of the portfolio. Similar story here, roughly about the same weighted average duration in this portfolio, about 5 years or so. And again, that's a measure of interest rate sensitivity. And, just to be clear, what this kind of connotes is if interest rates across the board rose 1% tomorrow, the fixed income portfolio would decline by roughly about 5%. Again, similar story, traces the endowment portfolio over time, beginning 2018 with roughly $3.3 million. And tracing it through with market movements, net transfers in and out, fees and expenses, distributions into the portfolio, and then market movements and fluctuations, ending January at roughly $4.1 million. Performance-wise, very similar story as the prior portfolio, outperforming really pretty substantially in the 1 year space, mainly due to outperformance in the core equity strategy, 3 year, 5 year, and also 10 year trailing returns. Again, the core equity strategy and some of our blends of mutual funds kind of underperform. I shouldn't say kind of, they did underperform the S&P 500 and some of the other indices, the international indices, and emerging market indices to begin the year. But again, some of this is kind of corrected over the last month or so. And this is the OPEB portfolio. And this is 100% fixed income, which is connoted by the maximum income objective up at the top. And, you know, again, about 2% in cash. You know, we try to keep that as low as possible, you know, roughly 80% in fixed income. And real assets in this case, which is inflation protected treasuries only, you know, a little bit different, but still a pretty good inflationary hedge on the portfolio, running about $169,000. Total market value, 970, call it 3,000 as of the end of January. Again, you know, less telling here, but again, it's really 100% fixed income portfolio. It's just, again, I believe we touched on this last year, the way we classify the inflation protected treasuries now is under this real asset basket, because we do make use of them in other portfolios as part of the mix, you know, of the inflationary hedge that we do maintain in our portfolios. Similar duration story here, about a 5-year average duration in this portfolio. And this, you know, again, same thing, balance of accounts, beginning in 2019 with the initial funding of $500,000. And then you can see each of the subsequent years and year to date, another contribution of roughly $182,000 into the account. Fees and expenses depicted, income distributions into the portfolio, and you can see unrealized gains and losses in the portfolio. And again, this portfolio in a rising interest rate environment that we've been in over really last year and year to date this year is where some of the decline in market value comes into play. Which is, you know, depicted here. So again, in, you know, 3-month and year-to-date space, underperforming, but over the 1-year trailing versus the blended benchmark, albeit in a negative position at negative 0.27%, outperforming substantially the, you know, the benchmark that we bench ourselves to, which in this case is the Bloomberg Barclays U.S. Intermediate Government and Credit Index. And this is the reserve portfolio. It's very similar profile, albeit different sizing to the OPEB portfolio. Again, 100% fixed income, cash and cash equivalents about 2%. Fixed income overall. The rest of the portfolio, it's just 83% is classified in our reporting as fixed income, and the other, you know, 14, 15% is classified as real assets, and that is the Treasury inflation, basically TIPS, inflation protected Treasury securities. You know, again, similar profile here. Very similar weighted average duration, a little slightly higher than the previous portfolios, but not by much, you know, about a 5-year weighted average duration, just for measure of interest rate sensitivity of the portfolio. Trace over time, again, beginning in 2018 with roughly $3.6 million, ending market value as of the end of January, about $4.2 million. And, you know, again, performance a little bit below the benchmarks to begin this year, you know, over the trailing 3-month and year to date, but outperforming in 1 year, 3-year, and 5-year space. No questions on that. So the overall economic summary, again, as I touched on, is, as you can see here in our key takeaways as of the end of January, and not very much has changed other than the Ukrainian situation in the key takeaway section from January through February. But, again, the 3 Ps are the pandemic, which, here is clearly connoted that seemingly so, eventually we'll all be back and hopefully having these meetings in person, sometime soon or at the next go around, as the Omicron variant is beginning to wane, albeit, you're starting to hear some things about a different variant picking up in Europe, but it kind of hasn't made its way over here yet. But, most of, from what we can tell, our clientele are kind of getting back to the office a little bit more than had been us as well. Starting to have a relaxing of the mask mandates and, more in-person meetings. And really, this is the main thing that I would take away from, the, pandemic, Ukrainian situation, which we call Putin, and also the seemingly poised increase in interest rates, is that all this is going to add up to just increased or heightened market volatility. And we've been experiencing that this year with much larger, granted trending downward to begin the year, but, overall much larger movements in the equity market specifically. And you're starting to see also some kind of a little bit more what I would call wild fluctuations in the fixed income market too, with kind of 10-year securities as, the primary flight to quality trade. So if the market's trending down substantially, you'll see a lot of investors kind of pull out of the equity markets, or kind of what I want to call traders at various firms pull out of the equity markets and, basically just park the cash in 10-year bonds, which causes the yields on those to decrease. That being said, what we're recommending for our clientele is to kind of stay the course, maintain discipline to the overall investment policy statements that, each investor has, whether it's an institution like yourself or some of our individual investors that we work with, and really try to take advantage of the market fluctuations, meaning that in a down market, we'll rebalance from fixed income where appropriate. Clearly, some of your portfolios are 100% fixed income, but in the equity-based portfolios, we'll rebalance from fixed income into the equity market, and vice versa. When the market kind of snaps back up, we will rebalance out of equities into fixed income as well, and just kind of maintain the modest overweight to equities at this point that we have been for some time. And here it kind of connotes that we have in the 4th bullet point down, pretty substantial inflationary pressures in our economy. And this is why we're very confident that in the 5th bullet point that the Federal Reserve is going to begin to raise interest rates. However, again, we do in the final bullet point maintain our tactical overweight to equities, really just based on to date strong corporate earnings, strong corporate balance sheets, and also just the overall at present lower level of interest rates. And that's basically all I had. I guess the only other point, and this just came up, it's not printed here on a call. It came up on an internal call the other day with our equity research group is, again, we're not foreseeing or projecting any types of recessions at this point. We see recessionary pressures kind of growing right now through the economic data. But any type of scenario like that we view as being 2 to 3 years out at least, and that kind of came from our equity group and isn't kind of printed here in any of the bullet points.
All right. Thank you, Brian. That was clear
Sure.
and comprehensive. Are there any questions? All right. Well, thank you again, Brian.
Absolutely.
everyone at Key for all of that information. Very helpful.
Thank you.
All right, I think that brings us to Tyler
Thank you.
for an update on fire management.
Hey, good morning, everybody.
Morning.
So I'm going to review the 2021 fire season and give you our plans for this year in a short presentation of about 14 slides. So last year, in the spring, we brought on our fire crew. So we hire 2 fire techs for the fire season, which starts in the spring. Last year, we brought them on the first week of April, and they end in mid-November, right before Thanksgiving. So that's Dave Brickner on the left, coming back for his second season, and Todd Company on the right. And he's coming back for his, came back for his 4th season last year. We start every fire season with training. So in order to maintain your wildland firefighter certification, you have to attend an annual fire line refresher. That top picture is people doing the pack test over on Madison Avenue Extension. The Albany Pine Bush is the Region 4 location for the DEC's annual fire line refresher. We refreshed 68 wildland firefighters. That's the largest refresher in the state. And then we also had the introduction to wildland firefighting class right here at the Discovery Center. We had 19 students last year, and it included a live fire exercise where we burned the planter beds, which is the grass right in front of the center here, last April. This was our management unit list here to choose from. They're shown in red. We had 34 management units, which is over 600 acres that we could have burned last year. They're spread out across the preserve, some in each region. And we have more on this list, knowing that we're not going to get to all of it each year. So last year we had 15 burn days. We burned 294 acres, and we burned 20 of the 34 management units that we had listed for fire in 2021. The largest was a 74-acre burn. That's in the lower southwestern portion of the preserve here. We burned within the Blue Trail, that is, last April, and our smallest burn was under 3 acres. We had 1 burn that was shut down, never made it out of test fire, and then 2 burns that we started and had to shut down due to smoke dispersal. So this chart just shows how we stack up compared to the rest of the years in number of days. So with 15 burn days last season, we were 1 shy of the 2019 season where we had 16. This shows burn acres by year. 2021 was the second most acres we've burned in a year, with just under 300. And this breakdown shows all of the burn days from 1991 to 2021, broken down by month. You can see April and May are normally the months that we burn the most in, but we did start in March last year and we finished in December. We had 2 in March, 3 in April, 3 in May, 1 in June, 1 in July, 1 in September, 1 in October, 2 in November, and then 1 in December last year. So that was our breakdown by month. And December 14th was the latest we've burned in any year at the Pine Bush. We also assisted partners last year. So in addition to the 15 burn days we had here at the Pine Bush, we assisted New York State DEC, really in a couple locations across the state. We burned 3 rivers in March. That's over by Cicero, New York, over by Syracuse. We burned Rush Oak Openings, that's just south of Rochester, out in Region 8. We burned on Rocky Point in Long Island in May, and then another burn in May in the Long Island State Pine Barrens. Louise Eker, that's in southern Albany County. We burned that also in May. And in September, I went down and helped the DEC burn another burn in Long Island. We also assisted state parks at Ganondigan State Historic Site. That's in Victor, New York, with a burn in August. And then we had 2 burns with the National Park Service. We burned in Gettysburg and also in Saratoga. Those were both in April. And then our latest assist was last year was with the Nature Conservancy, and that was in the Wells Barrens Preserve, which is in Maine, and that was October 21st. I was also fortunate enough to get picked up on the New York State Hand Crew 1. We went to the Greenwood Fire in Superior National Forest. I was there in late August through early September. I got to work 3 days as a task force leader trainee, which is a new role I'm pursuing in in wildland fire. I pinch batted as crew boss for 3 days. So our crew boss, Kevin Slade, could work as a task force leader trainee. And then the remainder of the time on the assignment, I was a faller 2. So I was a chainsaw operator. We had several public events last year. We had no formal Smokey Bear Day. We instead, Neil and I did a fire hike in October. And then the education staff came up with this Smokey Bear Day drive-through event that we assisted with. That's the picture on the bottom with Ranger Tyler Mitchell, Chris, Jackie, and Dave, and Todd companies in the Smokey Bear suit. And then we were also invited by the Guilderland Fire Department to do an event, a recruiting event with the Willow Street community. And they had it right at the trailhead there. And that's Dave Brickner showing that girl how a bladder bag works. Last year, we were successful in our wildland risk reduction funding application. That's a grant from the U.S. Forest Service. It provided us with $150,000 in direct funds, and it required 100% match. So we had to put up 150 of our own, and that allowed us to mow 143 acres. That was done last December, and then also treat roughly 1,200 acres chemically. And Joel, shout out to Joel for managing those contracts. That's going to allow us to burn 143 acres this upcoming year, and the chemical treatments are a precursor to fire. So for 2022, Dave and Todd came back for another year. So there they are. They started the first week of March in the snow here. So but we're already getting going, getting the equipment ready. And we actually already had an assist with the U.S. Fish and Wildlife Service. That was just this week. So this is a map of our potential burn units for 2022. There's 768 acres there. We're not going to burn all of it, but that's what we could burn this year, depending on weather. Like Chris mentioned, we sent out postcard notifications. That was the postcard he was holding up. And a big thank you to Wendy for the work she did on this, setting up this prescribed fire notification. So if you go to the website in the on the postcard and click on the link that you'd like to be notified, you sign up right here and you'll get an email notification the day that we burn, or sorry, the day prior that we burn. And what's nice about this is people can add themselves and they can unsubscribe themselves if the emails get annoying. And it will take a lot of phone calls off of my plate, which can take up to around 3 hours if you're doing it by yourself. So moving people to the email notification will really help. We'll still do the phone calls if people want them, but oftentimes we're waiting for the person to ignore the phone call so we can leave a voicemail. And this way they just get an email notification, they can open it up and all the information's right there and they don't have to dial in and listen to their voice messages to get the information. So these are pictures from Tuesday of this week. There's Dave and Todd. On the photograph on the right, that's Atlantic City in the background. We were assisting the United States Fish and Wildlife Service with a burn in Forsyth National Wildlife Refuge. It was around 350 acres. So we've already started burning this year. For training, we're having 2 refreshers. The first is April 1st at Five Rivers Education Center in Delmar. And the second is April 2nd. That's going to be here at the Discovery Center. I'm the lead instructor of both of those trainings. And then the following weekend in September, weekend in April, the 9th, I'm putting on the Introduction to Wildland Firefighting class. That's people, including Kat, who's on our staff, are going to take the class. And people have expressed interest the year prior. And we also have a group of 15 Air National Guard members coming to take the class here at the Pine Bush. We partner with the DEC Forest Rangers to put that on each year. And also NIWIMA, that's the New York State Wildfire and Incident Management Academy. I'm sending Todd and Dave down next week to take pumps and firing operations. And I'm actually the instructor for the firing operations class, so I'll be down there with them. And I just also want to thank everybody on our staff, the communication, visitor service, administration, stewardship, education, and science. I couldn't do any of the burns without the support of all of those people, in addition to the friends and the commission itself. So thank you very much for all your help and support. I'd be happy to answer any questions anybody might have.
Thanks, Tyler, and thanks for all the hard work. I'm assuming the 2020 burn days and acreage numbers were so low because of COVID, or was there some other reason?
Yeah, so in 2020, we had an early thaw. We had 3 burns actually in early March before we had documented cases in Albany County, and then we shut down burning in 2020. So we did not burn the rest of the calendar year.
Well, thank you for your tenacity. It takes a lot to be able to, it takes a lot to do construction projects in New York State. I imagine it takes an awful lot to burn in New York State.
Yeah.
So thank you.
Thank you.
Thanks, Tyler. Just one thing, you notice all the assists that we do, all the different places that we go,
Yeah.
and take it from a guy who started here in the commission 29 years ago in fire. Like, the fire community is a pretty small community. And there's a lot of rigorous training that goes into that. And you have to maintain experience and fitness. So the only way fire really gets done in the Northeast, it's not like the Southeast or the Northwest, where there's lots and lots of trained people. It's a small group. You've got the Forest Service, you got Fish and Wildlife, DEC Parks, the Pine Bush Commission. So we all work together. So every place that we go, those people come here to help us with their equipment, with their personnel. So it's a really important thing that happens in cooperation between all these agencies and us. So, and Tyler manages those relationships. So thanks.
Yeah, thank you. All right, and last but not least, Erin, the microphone is yours.
Thank you. Good morning, everyone. Just a quick update on a program that is happening right now. It's a modification of a prior program that we ran that was the Karner Kids Film Festival. We've modified it a little bit, and it is the Karner Clips Challenge now. And this is an invitation to all people. It's not just for kids anymore, it's kids and adults. And we're inviting people to record a short film, no longer than 1 minute, just a 60-second film. And we have 3 different challenges. So the challenge that's open right now is called Inspired by Endangered Species. And we're inviting people to use the Karner Blue Butterfly as an inspiration for artistic expression and to create a film about how you choose to express kind of your artistic representation of the Karner Blue. So it could be through art, it could be photography, it could be dance, it could be something else. And you make a video about it and submit it through our website, and we will be awarding prizes. The current challenge ends May 6th, and we hope to have prizes announced or awarded by Lupin Festival, which is another quick announcement I wanted to make, just to remind everybody that Lupin Fest is going to be in person this year. It'll be outdoors on Saturday, May 21st. So we hope everyone can make it. It's from 10 to 4 right here at the Discovery Center. And we're really excited that we can be in person again. There'll be live music. There'll be live wildlife presentations, lots of vendors and community partners, and lots more going on. So I hope you can make it to that. And just one other quick announcement, the Discovery Center is also now open. We're back to regular hours. So we're open 7 days a week again. So we're excited to have been able to expand our hours back to pre-pandemic times. And that's it.
Thanks, Erin.
You're welcome.
How's everything going with the Discovery Center now being open fully? How's any hiccups or any concerns, or is everything moving smoothly?
It's all going smoothly. We still have a couple of exhibits that we haven't been able to fully reopen due to sanitizing protocols, but most of the exhibits have been reopened and people are really starting to come back. In the beginning, it was a little bit slow. I think some people are still a little bit worried about coming indoors, but more and more we've been seeing attendance pick up. And yeah, so it's going really smoothly.
Great.
Thanks, Erin.
All right, I think that covers our agenda for today's meeting. Is there any other or new business to raise?
The only thing I was going to say, Tony, is I think you and I agreed that we could have a conversation with the board about whether or not we wanted to do in-person or virtual meetings. I guess a hybrid is would make everybody happy. And that I just made that assumption. So if any of the board members disagree, send me an email and say, no, Chris, you're wrong. I want it this way. Just let me know.
I don't know why we wouldn't do a hybrid.
If we can, right?
Yeah.
And we'll have the space, and if in fact everyone chooses to attend in person, we'll have the capacity for that, correct?
Yes, we will. Yes, for all the board members and public as well, the way we used to. Okay.
So next meeting, June 16th.
June 16th, Thursday, the 16th.
Yep, and it'll be, it sounds like, unless Chris receives an email from anybody between now and then, it'll be a hybrid where people will have the option of participating in person or virtually. So looking forward to seeing all of you.
Same here.
All right, can we have a motion to adjourn?
Motion to adjourn.
Supervisor Crummy. Let's see. Okay.
All right, thank you, everyone.
Thank
Be
you.
well.
Thank you.
Same.
Thank you.
Have a great day, everybody.